Hello, I'm John Furrier with Dave Vellante for our CUBE pod. We missed last week, but we're back on episode 113. Dave, salute to you. You're in Boston.
Hello, John. How you doing, man? Good to see you.
We're shut down like the government, but put new equipment in our NYSC studio for the CUBE. The CUBE wired, we're calling it. It's the CUBE wire. It's wiring up all these networks with the NYSC wired and getting the new gear in. Michael Dell's going to be in town. Jensen Huang's also in town. We're trying to get them both together on the CUBE. But we're shut down like the government, which is killing IPOs, by the way. So SEC is a government entity, Dave. They block IPOs when shit shuts down. So does the paperwork. So, the word on the floor here in New York Stock Exchange is that the IPO window's open, but again, Trump, what he did, Liberation Day, clogged the system. Now the system's going to get clogged again. The government was running smoothly. Big impact. So,
do you remember?
No, it's a shit show.
Do you remember in 2013, I think it was, when the government shut down? We had Scott McNeely on.
EMC World.
And we said to him, it was like a 2-week shutdown. We're like, what do you think of the government shutdown? He said, 4 more years. Now, he was joking, of course, but I think, Scott, was always pretty controversial. But yeah, this sucks. It's got to be resolved. Let's get back to business, Congress people. This finger pointing is, nobody wants to hear my opinion on the government shutdown. It's just, I'm sure that everybody's frustrated as I am.
Well, we have stories on this. SiliconANGLE's Rob Hope has got some stories around cybersecurity and AI, some of the impacts throughout tech. Obviously, the tech influence is high right now. So, a little bit of disruption to some of that momentum, the MAGA momentum, also the pro-tech momentum that Trump has been fostering. We've covered it here on the pod, certainly on SiliconANGLE and the CUBE with the Genius and Clarity Act. The crypto market's hot. In fact, our your favorite crypto CUBE interview that we did here.
Yeah,
Mr.
with Tom Lee. Yeah,
he went public today. So
with his next SPAC, right? He's cleaning up, boy. He's running the table on crypto, trying to be a little Michael Saylor.
He just closed the opening bell with his SPAC company, and those treasuries, we'll see how they do.
They make their money on the way in,
I hold my opinions on the SPAC stuff.
Boy.
Love the IPO market. It is hot and heavy. All the companies that are looking good are lining up. I'm hearing word that a lot of IPO activity going into 2026. Even with the SEC and the government shutdown, which might cause a little delay in this window in the fall, October, November, I think you'll see a handful of IPOs. But I think 2026 Q1 and Q2 will be monster IPO months or quarters, I should say. And it's going to be pretty amazing. So we'll see how that goes. Now, Jeff Bezos is saying we're in an AI bubble. I'm kind of not on the Bubba-licious web popping bubble side of the equation. I think, the AI bubble is a little bit more real than the .com bubble, which was very much true that was going to happen, but it was very much not a lot of valuation. I think there's a lot more mature monetization with, say, data, models, things of that nature. A lot of big companies are also feeding their ecosystems, like Salesforce, for instance. We're going to be at Dreamforce in 2 weeks. You're going to be popping in. I'll be there all 4 days. One IPO that I was supposed to cover and do a podcast on is delayed because of the SEC, so I'm going to stay at Dreamforce that whole week. But the startups are active, and the enterprise is kind of opening up, but still, it's not, full throttle yet. So, if the IPO window opens up and continues into 2026 and the enterprise starts getting the groove swing, you're going to see AI companies go public in 26. certainly the big names might. Then it's going to put a lot of pressure on, say, the Databrickses of the world. So it's going to be very interesting to see how the privates that are basically quasi-public now, these later stage Databricks like companies, do they stay private or do they go public? So again, companies like Cohesity, Sanjay Puna's company, rumor is he's going to go public. I think he actually said it on theCUBE. They're going through the works. So we'll see.
Well,
We'll see what happens.
A few months ago, if you had asked me, are we in a bubble? I would have said, no. I mean, obviously there's a lot of enthusiasm. It's Bubba-licious, but I wouldn't have said we're in a bubble. I think everybody's starting to rethink that with the circular references and the investments. And, the difference between this and .com, of course, was the .com, everybody knows, was built on debt. This has been built on hyperscaler CapEx. But now you're starting to see the NeoClouds, build up a lot of debt. You're seeing that circular reference that I referred to with the government investing, NVIDIA investing. So it's reminiscent of that. I think we are entering a bubble, and I think the bubble will burst, but God knows when. I'll tell you, I know exactly when it's going to burst. When people least expect it, then it's going to burst. And if you miss out as an investor, if you just sell everything because you're afraid of the bubble, unless you get either lucky or you have some, serious market intelligence or a model, chances are you're going to miss the signs. So you should probably just stay invested, buy quality, keep some cash on the sidelines for when it does burst and you can load up again. But pretty much everybody's going to endure some pain when the bubble bursts, which, bubbles always burst unless it's not real. So
what's going to be interesting to see, to your point, is that, because I think I have a little bit different take than that. I think the Tom Lee's going public illustrates what we used to call drinking from the trough, right? When the money making is dominating the pace of extracting the value, then it will pop like a big bad balloon, boom, big pin pop. If the AI maturity kicks in, and you got, obviously, crypto is booming, so a little trough drinking going on there. But the AI side is where I think where the meat and the bone is. And if the AI durability of these big ecosystems like the Salesforce, like the AWS, like the OpenAI starts building these ecosystems, even NVIDIA, their ecosystem's developing nicely with AI factories. So if that happens, it might be the balloon bubble will let the air out more and it won't have a massive pop. The .com pop, which was, to me, in our generation, the biggest pop of all I've ever seen in my lifetime. And because it caused the nuclear winter, and then it also caused the telecom bust that happened right after it. So there was a second order effect with telecom. So what I'm watching is, are there those second order effects with the pop or the air letting out of the bubble? I think there's definitely inflated, for sure. No debate there. The question is it a pop like the .com bubble pop where it's the collateral damage is nuclear winter? Or is it a light pop where, people lose money, the trough drinking doesn't go as heavy and it gets more rational? That's a question. And I'm watching very closely. The tea leaves are NVIDIA, all the CapEx investment going into the NeoClouds and all the infrastructure. Does that investment cross over to intelligent edge AI? Because that's where the action will be, because all the monetization will happen either in the application space. Think retail. Think a device the size of a fire alarm that's basically a 5G base station, or whatever connects intelligent edge to not the old school IoT intelligent edge like manufacturing, but like we're talking about like real inference and training at the edge. Right now, all this AI talk in the edge is inference only. No one's talking about training. So I'm watching this very, very closely. If that develops, then all those computer vision applications, automotive applications, healthcare applications, life sciences discoveries will kick in. That's real value, right? That's not the company that makes an algorithm or software package. That's true extraction, value creation, extraction happening with thousands and thousands of companies. If that happens faster, there will be no there'll be no nuclear winter. It'll be a step function kick-up curve. So, the S curve might look different. It might have a little break. It might zig and zag a little bit. But I think that's a scenario that's very much in the cards. So I'm on the school of too early to call the bubble popping with nuclear winter.
I think the hard part about bubbles is, investors have been really successful with buy the dip, buy the dip, buy the dip, and it's been working. And then the hard part about bubbles is this a buy the dip moment, or is this the bubble bursting? And then, flip a coin, because chances are you won't know for sure. The other thing is, you remember well, you were living there, what Silicon Valley was like between, after 9/11 until the Google IPO. I mean, it was like kind of a ghost town. I mean, it was tough environment. I remember Ed Zander from Sun Microsystems saying on one of the earnings call, anybody want to buy a server? And so it was like, and offices were empty and people just weren't doing business. Doing business was really hard around that time.
And funding was tight too. I mean, getting a Series A funding was incredibly difficult. Even seed angel investors were not investing. So
and the Google IPO started to open things up, but it was slow. I mean, it was a slow slog back. And then it rocketed back, but it was, in pockets, and it took a long time to get going. And then, things were going okay, and then the market blew up again in 2007, 2008 with the housing crisis. And so these things are hard to predict. You remember the book and the movie The Big Short, and the character who had called the downturn, things were turning down and they couldn't understand. I mean, that everything was happening that they predicted, all the mortgage defaults, et cetera. And they were like, why isn't it blowing up? And of course, the reason was because all the banks were propping it up until they could unload all their crap debt and crappy assets, and that happened. But eventually they were right. But again, even then, when all the signs were there, everything pointed to the market tanking, it didn't tank. And so very hard to predict. Just be mentally prepared, I guess is what I would say.
The infrastructure's on fire. I mean, the infrastructure is on big time, still thundering away. Cerebras, the company we've been following very closely,
Right.
Raised $1 billion, 1.1 billion they raised. That's not the valuation, that's the money they raised. Okay. Meta just spent 14 billion on CoreWeave infrastructure. So having those GPUs helps. They also are buying a chip maker, and Nscale, another infrastructure cloud provider, raised 433 million on top of the 1.1 billion it raised the previous week. So you start to see these monsters. That's a European venture. There's so massive outlay for cash and also acquisition. So, I think it's going to be really big. I think we're in a, the tide's coming in, boats are sitting there waiting to rise with the tide. So that's going to be, to me, the key. Does that CapEx convert into value, or does some architectural shift happen where the power envelopes within AI factories for the enterprise and edge become a mix of XPUs, a GPU for this and a CPU for that? So that will tell. And that's kind of like the deep seek angle. We talk about it almost every week, but that's still in play. We'll see. Other news, Gavin Newsom signed a potentially influential AI safety law. So now you're starting to see lawmaking going on. So you got these wild west picks and shovels, large scale AI factories being built. Texas is dominating, and they're seeing the news there. NVIDIA put $1 billion into OpenAI as an investment. Jensen said, quote, this went very quickly because, an opportunity to invest is good for him. He liked that. Of course, it's got some stock to trade there, but they got the cash. So we'll see. And then that narrative that went around, I don't know if you saw the MIT, there's more AI failures than successes, or more progress.
That's all anybody talks about at these conferences. Everybody says, Well, that's not, we're in the 5%. Our customers are in the 5%. I mean, UiPath, I actually talked to a couple customers that were closer to that 5%, but it's,
People are debunking that. People are saying that's not true. I mean,
right.
That there was a
Well, what do you think? What do you think?
Well, Kevin Werbach is a friend. He's at the University of Pennsylvania. He wrote a killer post. Show me the data. The survey, the people are now looking at because it's getting so much traction as a narrative. The people who are investigating this, like us, are like, show me the numbers. What's surveying? Who are the people? It's easy to cherry pick, but the general consensus of the people I talked to, and we've had on theCUBE, you and I have talked to, are saying the same thing. There's more successes than failures. Of course, failures. What's this Thomas Edison's famous line? I figured 2,000 ways not to create electricity. There's failure is not the issue. The issue is there progress and momentum to real AI native solutions or AI infused, I call retrofit. People hate that word because it sounds like it's retrofitted, but I'm talking about pre-existing SaaS apps that are retrofitted with AI, like SAP, for instance. They're not an AI native application, but they're infusing AI in, and then you got these developers who today are building AI native, which is simply completely built around first principles of the models and abstraction layers around them. So you got, really fast moving companies doing AI native. So AI native is a legit trend. And just like SaaS was a legit trend. So there's a little bit of a nuance there, but if you're in the SaaS era and you're not porting to AI and get AI fused, you're screwed. Now, I've been noticing in our studio, which is offline, as we mentioned, this past week when we were broadcasting, I keep my right eye open on the board on the trade option side. Open Door has been on the board all week. They're under siege because of their predicament. The CEO put out a memo and said, if you're not AI first on everything you do in this company, that's a problem. Before you even go to a PowerPoint or go to a Google Doc, use AI first. Learn the models, save your prompts, build the muscle. And it was a really over the top internal leaked memo. And so, and then the people on the thread are like saying, that's like saying lose weight and get in shape. Now, you could say that, right? You could say, hey, Dave, get in shape and get fit. Like, okay, great. Get AI. How? What's your routine? What do you, so again, this is like some of the prescriptive nonsense you hear, but unless you tell someone what to do, or they have a playbook, there's really no action. Yeah, I mean, what do I do? I get more aerobic or less aerobic? Do I do more weights? Do I do, army workouts? I mean,
on the MIT study, I think that you got to say, well, okay, well, what's failure? But first, to your point, first of all, is failure bad? Are there learnings from that you can pick up on that can actually lead to success? But the definition I think they used in the study was, measurable, KPIs and essentially P&L impact. And, 6 months after pilot, it's like, I'm not so sure you're going to see something 6 months after pilot. I mean, most technology projects are going to be, if they're meaningful, at least a 12-month break even. And I should also say, people, they throw around the term ROI. Well, ROI is just a percentage. ROI calculation is benefit over cost. Okay. In and of itself, it's just a percentage. It doesn't, of course, it should be IRR because, discounted cash flows, but it's just a percentage. So would you rather have 1,000% ROI on a project that throws off $1, or would you rather have a 10% ROI on a project that throws off $1 billion? Of course, you'd rather have the latter. The other dimension of ROI is time frame, like break even. At what point do the project cost and the CapEx that you put in, pay back so that you break even? So there's a time frame, and normally technology projects that are meaningful take at least a year, sometimes 18 months. So I'm not sure those P&L impacts would have shown up yet. They might have seen some efficiency hits. You might have seen some benefits that maybe haven't cycled through to the income statement yet. So, and people are criticizing the sample of only 52. I'm not so worried about that. I mean, you talk to 52 companies, you're going to get I think you could talk to 3 to 5 that have actually implemented AI and start to get a picture. 52, I'm sure if you did in-depth interviews, you'd start to get a picture. But I guess the point I'm making is, how you define value matters. And I think different companies have different, metrics. And I think that, it remains to be seen. The last thing I'll say is I think people are being careful for obvious reasons about AI. There's compliance, there's legal, there's PII, there's uncertainty, and they're not not trying to hit home runs, kind of like the Red Sox last night. Maybe they were trying to hit home runs, they just failed. But they're doing quick wins, and there's nothing wrong with that. It's just, okay, is it worth it? They stood up a chatbot. Okay, great. They did some RAG. Okay, great. What's been the business impact? Not really obvious quite yet. And I think this is why I keep saying, 2025, 2026, not going to be the year of agentic. It's going to take the better part of a decade to play out because you got to harmonize your data. You got to clean the data. You got to think about the security model. You got to worry about all these other things, governance, et cetera, et cetera. And that's not trivial. So who's going to lead the way? I think Floyer's right about this. I think new companies that come out of the woodworks that are AI native, that have radically better revenue per person, and they're out there. They're just kind of hidden. But some are going to emerge and it's like blow away previous expectations. And then it's going to start to disrupt. And then that's where it's going to get interesting. We'll see that's where the pain comes and the disruption. Because I've always said, when it's new and old, the new is never big enough to offset the decline in the old. The growth in new is never big enough to offset the decline in the old. And that's where people start to get skeptical. And that's probably where the bases of bubbles begin to form.
Yeah, and I think the apps that are going to be AI native, like Furrier points out, are going to come from the AI infrastructure. And I was reading on SiliconANGLE today. They picked up on a Wall Street Journal article around Grok, a company. We just interviewed the guy last week, or this week, I should say. I think it's last week, this week. They have already 12 data centers, okay? And their ability to essentially drop ship data center capability, it's phenomenal. It's something that came out of the interview, their CTO. And they just announced today that they plan to have 12 more plus data centers in 2026. And so what Grok has figured out is that they got the super chip, as I call it, super chip is what it means. They use that word. They have the LPU. Obviously, Jonathan came from Google. They're getting a lot of props. And one of the things that I like and they're getting props for is that they can drop a data center anywhere. They're not a one-trick pony. So rather than retrofitting a data center for power and cooling, they can go to anywhere that's got power that meets their requirements and literally drop in fully enclosed, open, large-scale systems. Okay, it's unbelievable. So that's going to be an interesting solution for things like sovereign cloud, global expansion. So if that happens, that's the tell sign again, back to the tea leaves. If that happens fast, then you'll see the developers take advantage of this. Whoever takes advantage of the horsepower, we've said this on many pods, we'll say it again, it's worth repeating. There's only two ways to get ahead. If you do both, you're like way ahead. Be the fastest with the fastest GPUs on the planet or systems and have a data moat. You do one of those, you win. You do both, you dominate, right? So, to get that capability, it's hard to spend the CapEx. If you're a startup, you're going to have to use a CoreWeave. You're going to have to use a Grok. You have to figure out how to use a service to get that speed advantage and then have your application be tuned to it and then have a data moat. So I think there's paths for companies to rise up with 5 to 12 people and be a $1 trillion company, potentially. So, there is paths. Now, that same advantage is not just for a startup. A Salesforce could move faster. Amazon could move faster. A big company like a bank could move faster. A life sciences company can move faster. An automotive company can move faster. So it's going to create an interesting dynamic for who's considered the leader, one, on the speeds and fees, and then two, does the application have the data mode to take advantage of it? It's almost obvious. And then if the edge comes online with true training, that's a telecom disruption. You know, where are you going to put these devices? On street corners, in retail outlets, the CUBE studios. I mean, everything's going to change. You're going to have, you know, basically Ethernet or 5, 6G capabilities in places that you go back 20 years ago when you had DSL and broadband, you had the wired connection. It was that last mile. The last mile is the holy grail again. So here we go.
And think about supply chain.
We've seen that movie before, right?
And think about, yeah, go ahead. Sorry.
No, I mean, we've seen that movie before. Remember the last mile, the baby bells, our regional bell operating, the
Yes,
they called them.
Cable
They
companies.
dominated the monopoly. So you had companies that were trying to provide connectivity got choked by the monopoly.
And think about all the data. So think about supply chain. Think about all the data that's at the edge and the difficulty of actually predicting when, you know, something's going to show up. I mean, Amazon obviously does a pretty good job of it. It's probably got a lot of vertical integration now, but so many times you expect something to show up, it doesn't, or it shows up and there's a piece missing. Well, why is that? It's just the data is they're so siloed. And like, even if you put all the data into a data lake, George Gilbert makes this point all the time. He's like, the star schema that you build, even if all your company data is in one data warehouse or data lake, sales has their own, you know, data set, marketing, finance, operations, research, they all have their own separate, you know, views of the data. They're not brought together. They're not consistent. They're not harmonized. And so it doesn't really matter if you put it all into the same place. It's what you do with it and how you interpret it and how you harmonize it. And so this is where the world is heading, that a digital representation of the enterprise means that you've got, you know, data sets even at the edge that are capable of not just saying what happened, when did it happen, maybe even why it happened, but what's going to happen next? What's the best next move? And to do that, you need some pretty sophisticated infrastructure, AI, intelligence, agents, et cetera, to be talking to each other through, you know, we're talking about MCP and A2A, all those things got to be governed. They got to have access to tools. This is a very complicated situation for a lot of organizations. And then the last thing I'll say is every wave that we go through, when we went from on-prem to SaaS, and now we're going from SaaS to a new era, it brings changes in the technology model. You know, on-prem, we did everything ourselves, very CapEx intensive, perpetual license. You go to the cloud and SaaS, it's the cloud infrastructure, it's subscription models or consumption models, it's different pricing models, and then you go now to the AI era. The technology, the operational model, and the business model and the pricing models are going to completely change. And George has this theory that this is not just about technology companies. This is about all enterprises, every business and every industry. And he believes, you know, the saying, every company is a software company. Well, the truth is, not really. It's really hard to be a software company. We're actually maybe entering the era where every company is a software company in the sense that if they can organize their knowledge work with fewer humans and more agents in terms of that ratio, and they get on an experience curve where that knowledge is not just in Frank's head, tribal knowledge, it's actually in the system, and it's autodidactic. It gets smarter and smarter and smarter over time. The marginal economics of that business are going to get better and better and better at scale. And you could start to see a winner-take-most dynamic emerge in a lot of different industries, in manufacturing, in retail, in finance, you know, in banking, in energy. It could be where these companies who are on that learning curve have a substantial advantage like TSMC has over everybody else right now, thinking about, you know, the ultimate learning curve. So, and this is not going to happen overnight. This is going to take the better part of a decade to play out.
Yeah, it's a pretty fun wave. Check this out. I just was going through the news before we had the pod, and the top story today is Apple removes the Ice Block app, which anonymously allows someone to anonymously report ICE officer sightings. The AG Pam Bondi directed DOJ to ask Apple to remove the app. Apple did. So huge threads going on that. Big time thing. The Google and Apple removed Red Dot, an app for reporting ICE sightings. Google says the app was being used to share the location of a vulnerable group. So, okay, talk about edge, surveillance, policy, law. The intersection of AI and crypto in this era is that so much fundamental change that there's, again, we've seen law and policy kind of be lockstep in the early days of the internet, but it wasn't as active as now. And this is an example of the government, the AG, saying, hey, Tim Cook, take down that app. So, I don't know how I feel about it, other than the fact that, when government says you got to do something, you don't can't flip them the bird.
You mean the ice tracker? What was it called? Icebreaker?
It's called Ice Block.
Ice Block. Yeah, okay.
Ice Block. Yeah.
Good name. That's a really good name. But wow, that's pretty contentious, isn't it? But I mean, okay, but I mean, I don't know how I feel about that, huh? So the government said take it off.
They have to have evidence, because why would they? I think that there's so much anti-ICE, the dogma and the hate. I think there's probably examples of both sides using apps to do bad things, and that should be more public. I'd like to see more data on this, because they should make it very transparent. Obviously, when government gets involved, it's news, so it's really hard news, and of course, it's political and tech. So it kind of hits the top of the charts from a content standpoint. So, personally, I think we're in an era where media and government and tech, the more transparency, the more transparent you are, the better. Okay, why the frick do you want to do this? Show me the data. Because you don't like it? That's different than saying, okay, maybe people are targeting people for harm. So
I mean,
I kind of waffle on this,
Remember radar detectors? Remember radar detectors? Weren't they illegal?
I had one all the time.
Yeah, right, but many of us did. Weren't they illegal in some states? Remember, you driving through like Connecticut, you'd have to hide the radar detector, right? Because they were illegal. So it's kind of similar. Look, like certainly local laws, and this is, I guess, a federal initiated thing. I don't know. I mean,
I have to explain what radar detectors are.
You know how in Waze it shows you where the cops are? Well, it used to be, these signals that could detect radar. Like literally, they still have them. If you drive a Tesla Plaid, you should have a radar detector.
I'll never forget. I had one since they first came out. You had to buy it from another state. I think I lived in New Jersey or Massachusetts. I can't remember. And I'd be so proud. I'm like driving like 80, buzzing down the Mass Pike, and just look for the radar. But remember they came out with the new radar guns. The cops would then pulse you. I'll never forget the.
It was a constantly game of cat and mouse. Right?
It's like, damn, I got pulsed. Thought I was bulletproof. Fuck.
You start beeping like crazy. You'd be like, oh, crap.
You'd hear it. It'd be silent. All of a sudden, it would go from 0 to full lit up. Like, it was just like, oh, I'm bagged. It's like paintball, right? You just get hit. Yeah. It's like, oh.
So, but Waze is pretty accurate. I mean, I know a lot of people don't like Waze.
Waze has gotten very cluttery to me. It's almost like
from a direction standpoint, it's not good. Apple Maps may be better, but from where are the cops, it's good. It's really good.
So the big news this week also was that there was an upgrade to the models. So we covered that on SiliconANGLE as well.
Anthropic
and then the Sora model came out.
Well, how about Comet? Have you played with Comet at all?
My son Alec got an invite. I didn't grab this last one, but he loves it. He loves it. He thinks it's a great experience.
I've been using it. It's pretty cool. I'm a little afraid to connect it to my my data, but I'm almost there. It's really interesting, right?
Browser wars.
Yeah, exactly. When you download Comet, it's like one of the right there. It's like make Comet your default. Everything's checked. You import your contacts, import your email. Everything's checked. You got to opt out. I didn't make it my default, and I'm not ready to do that. I don't trust it yet, but this is really a shot across the bow, and it could be a better experience than the way Gemini works inside of Chrome. That's getting better too, though.
The user experiences are phenomenal. So I got to tell you, we're going to see some great things. I love the This Week in Enterprise story on SiliconANGLE. Rob Hof has face. He copied your idea of putting faces on either the Breaking Analysis with Sam Altman and Jamie Dimon.
Yeah.
And Mark Benioff and then Satya Nadella. He copied your thinking, and he's got these warring Braveheart kind of like battle scene with robots, and on the heads is
That's good.
Altman and
that's good. Yeah.
the guy from Anthropic going at it. So it's a battle of
Modi,
the
yeah,
models.
that's really good. They're in like the armored gear, and they're doing this, and he put the heads on there. He did a really good job. That's great. OpenAI battles Anthropic for model supremacy. AI chips stay hot, and California passes landmark AI safety bill. It's a great read. But Rob does this every week. Tremendous.
If you're listening, you're not catching the Weekend in Enterprise by Rob Hof. You're missing out on literally too long. If you're busy, that's a go-to summary of the week's news. He nails it.
Everything in enterprise tech he covers. It's fantastic.
The thing I want to talk to you about is this idea of model supremacy. So remember when we first started the pod, we debated about OpenAI. Do they have a moat? If you look at what's going on, there's going to be probably 3 to 4 people standing in the model game, right? So that's going to happen. But model supremacy is a real battle, and you see even on Apple. I was just reading another article and reports coming out on Apple Marketplace. The number one app right now is OpenAI Sonnet, and it's not even fully available. The free version's out there, but it's so popular. So you got Claude coming out with their benchmarks. Remember, we used to say it's a leapfrog game. You used to call it a ratchet game. It's that flywheel is definitely at play. And why I bring it up is I want to talk about 2 things. One, the business model, the societal impact, because there's going to be trillions of dollars of valuation for OpenAI if they continue this, and Anthropic. So is it top 4 make the most, and it's a kind of end game who can invest in all that? And then 2, on the enterprise side, the preferred architecture, talking to these key architects that I had on theCUBE, so these AI factory series and these deep dive series is that they're saying, don't get hung up on the models, get into a flywheel, let them do their behavior, let them play the ratchet game and keep that flywheel going, because tomorrow it's Gemini, today it's Anthropic, next it's OpenAI, then it's this model piece. So that model selection, most people would start by leaning into one model over the other. And smart money is saying, no, abstract away the app layer, okay, unless you fully have a direct workflow where you're integrating. So this brings up kind of the old school 3 sections of the stack, infra, platform, apps. So in the middle is the models, and the app layer, if they're going to be AI native, like Furrier predicted and many others are saying, AI native is based specifically on models being first principle. So if the model supremacy is a first principle design criteria, you got to figure out how to leverage the best at any given time. I mean, Anthropic owns the coding side right now, but new apps are coming out. New specialty models. Again, our power law from 3 years ago now feels like 10.
Yep, I know.
We called it. So this is totally happening. So big money that's investing in infrastructure below the models is kicking ass. The apps need to take advantage of the model, so they're separating and abstracting away that. But this new data engineering layer is coming up on both sides. And this is where I like Bedrock and SageMaker as an example. This is going to impact big money, Dave, because if you get this wrong, you're screwed, right? So I think it's a huge deal. It's very in the weeds. But it's a huge mistake if you get this wrong. So this could make or break companies. So there's a lot of pressure on chief AI officers right now, and every company's got one, and it's the hottest persona in the enterprise and large scale providers. Even the NeoClouds. I was not super high on NeoClouds, but now seeing what they're doing, they could be the next AWS. In fact, I saw a thread today I was really entertained on, but it was informative. Today marks the day that AOL shut down. And so one snarky comment said, maybe AOS might be the next AOL. So like, I mean, just hold that in your head for a second. AOL was the dominant thing, and it's gone now.
Granddaddy of the internet, AOL.
And so, you know,
They were. They were the hottest thing. I used to watch their stock every year. Their stock would start exploding right after Thanksgiving. I mean, they were all through the .com. They were the
instant message. You got mail. I love them. I had a really good URL. I think it was John.
Chats. The chat rooms in AOL were like Reddit good. I mean, they were amazing.
My email address was John F at AOL. Okay, that's the generic. It was a really good one. I'm sad to see that go. I keep my Hotmail account too, because people don't even know what Hotmail is. It's like a vinyl record for me. It's like a legacy.
So we've been talking to a lot. We've been talking to a lot of the NeoClouds, Crusoe, Lambda, CoreWeave, Nebius. Really interesting what they're doing. I mean, I hear you, John. At first I was like, well, I want the cloud guys just like eat these guys up. And it's like, because they're really specialized and they're really good at what they do. And they're pure plays. It's going to be interesting to see. Yeah. And of course the cloud has put an umbrella up price-wise, that allows these guys, now they're coming in with a lot of debt. They can be really price competitive. They've got major backers like NVIDIA. So they're disruptive. They're really disruptive. I doubt they're all going to make it. I mean, demand is so huge right now. I mean, I think there'll be some consolidation, but I kind of love watching it. And when you talk to them about their differentiation, they're like, this shit's really hard. And we're really good at it. We're like hyper passionate about it. We got great people. We're motivated. We got capital. They're financially very, very clever, sort of the moves they're making. The big question is, can they monetize the CapEx within the depreciation cycle? Of course, if they can't, like NVIDIA is basically buying excess capacity back from CoreWeave. But I think the CoreWeave in particular is pretty confident that they can monetize within that cycle, certainly if demand stays the same. And then they own the asset at the end of it, or they can do whatever they want with the asset. We've talked about this, does today's training infrastructure become tomorrow's inference infrastructure? You've pointed out, no, they're different. But are there other use cases for that asset? Is the asset worthless? These are unknown questions. But so the key is the monetization within that depreciation cycle. That's going to be critical for the income statement.
Yeah. I was looking over my shoulder because I was kind of maybe too loud because they're filming Mad Money behind me. So
are you on the balcony?
Yeah.
Oh.
I was kind of hear them cheering. I think if they are telling me to keep it down, I can't see them, so I'm talking too loud. I want to come back to the comment about AOL and AWS. Now, the snarky comment was AOL. Maybe Amazon could turn into AOL, and it would scare Andy Jassy, who is like Andy Grove in my mind. He's got that paranoid will survive. He's super smart. I think it's a good thing to say, get some attention. Yeah, it's a possibility that Amazon could age out and become an AOL. Side note in history. Okay. But I don't think so.
I gotta say, no way. AOL did no innovation. It was just like a kind of gimmicky, I mean, AWS is like, no, I'm just responding. Yeah. I know you wouldn't feel that, but AWS does some serious innovation. They invest. They got super smart people. Not that AOL didn't have smart people. I mean, I always like Steve Case. But you remember, AOL right?
They
AOL
missed the web.
they acquired Time, right? They acquired Time magazine.
They-
But yeah, they missed the web.
They acquired Netscape too. Yeah,
Oh, that's right.
remember
That's
that?
right.
So
Yeah.
I bring it up because one of the things I wanted to chat with you about was the innovator's dilemma. And Andy Jassy is went to Harvard, and his professor was Clay Christensen. So
Yeah.
he's a real student of Clay Christensen, who wrote the Innovator's Dilemma book, which is like a gold standard must read for anyone who, whether young or old. It's just a great book. And the interesting thing about AWS right now is because we're tracking them in reInvent's coming up at the halftime report. We're going to be there on site. So if anyone's listening and they're at reInvent, give me a DM. Got some things going on, but their strategy move is going to be very interesting. If you look at what NVIDIA's done, NVIDIA is selling to Amazon's alternatives, if you want to call them alternatives. So that's the NeoClouds and other people. So, and NVIDIA is also a big supplier to AWS, which is well done. They also, AWS has their own silicon. So if you're Jensen Huang, you want Andy Jassy. You need Andy Jassy.
You want him on that wall.
You want him on that wall.
You need him on that wall.
No doubt. You can't handle the truth. So, but Andy's not a dumbass either. He's gonna be like, if I get the GPUs first, he can choke the market and get the innovation on his side, because they do have good gear. And so their software. And so, people talk about this, but like, if you're Amazon, and Matt Garman was very clear to me the last time I talked to him in June, he's like, yeah, we love NVIDIA. We're like number one. I don't know if he said number one customer, but I think he might have hinted to that, or to the effect. Maybe I said, I go check the transcript, but they're not anti-NVIDIA. So I think if you're Jensen, Andy Jassy represents $1 trillion opportunity for him, because, you get Amazon and you have distributed computing playing out the way we've been covering it on theCUBE and theCUBE research. You will see that this game is not, these incumbents like the cloud guys are going to be just like what I was referring to about the model guys. The model supremacy is OpenAI, Anthropic, throw in Cohere and some other folks. Who's that third? Or Gemini's just third. And then you got the Coheres of the world. Like the models, you got cloud supremacy in the AI era up for grabs. So that's on the table. No one's talking about that. Everyone's kind of like, shitting on Amazon and Microsoft. Oh, you're just cloud guys. No. Cloud AI is hot. Nebius is all over this. They're like, no. Cloud is preferred strategy for AI. That's their position. Now, they come from a cloud. They had the cloud in Russia and whatnot. And they're doing great. So what's your take on that? Because I know you're covering the market share. Man, Amazon's not losing. I mean, all the cloud guys, the rich get richer in this market. What's your take on?
Well, so I would start with, Google, Amazon, claims it's got, such great growth rates. I mean, not Amazon, Microsoft, and it does, but remember, it changed the definitions, and it took out a bunch of legacy stuff and added some new stuff. So, Amazon generally doesn't play those games. I mean, you give Amazon some credit, I think, for whatever other is. I think they've put advertising now out of there. But at any rate, my point is, if you really kind of normalize Microsoft, its growth rates aren't that outrageous as you would think at their size. As well, remember, a lot of their growth is OpenAI, CapEx that's going to Azure. And so that's going to be interesting to see what steady state looks like there. But they are growing. I mean, they're growing in the mid-30s, so that's pretty awesome. And Azure is kicking ass, and it's ubiquitous. So I don't want to sound negative on Microsoft, because they're everywhere. Google is the one that impresses me the most with regard to the momentum they have around AI. They've got really good data models. They've got, good AI, really good AI. Gemini's awesome. And they just got to figure out, their core business. But the Google Cloud platform is now, I think, seen as a really legitimate platform. AWS growing at, let's call it 17, 18%, growing from a much larger base, although Azure is catching up to them. The thing about AWS is they're just infrastructure. They got no apps on top of that. So to me, that's an opportunity for them. Either through builders that want to build on top of AWS, or them building their own solutions like Connect. And so I'm still really positive on AWS. A lot of customers tell me I'm building my AI on top of AWS because that's my primary cloud provider, and they got all the tools, they got tons of optionality, and it's really, really good, and I like it, and they're used to it. So I think all three cloud players are going to win in the AI era. I think they are going to see new competition. In fact, I think I'm going to start adding CoreWeave now that they're public to my cloud model, start tracking them. I don't think they'll get completely disrupted. I don't. I think they've got strong foothold in the market, and I think that they've got basically strong lock-ins, and I think that they've shown that a triopoly is very viable. I think the one other wild card there is Alibaba. Fitzy says, "Oh, Alibaba's not a hyperscaler." I think Alibaba is a hyperscaler. I think you're seeing the momentum really pick up. I think the whole China v. US thing is real. They've got serious AI chops, and I think that's another one that could come out of the woodworks that nobody ever talks about. Is Alibaba in the cloud game, but Alibaba serves China, and it can also serve other parts of the world.
Well, we got a lot going on. We're covering like a blanket, so it's fun. I mean, for us, it's like so much fun between the enterprise action that we've been covering for 16 years and the studio flow out of Palo Alto, Boston, New York Stock Exchange. We're seeing a lot more of that enterprise mainstreaming. Next week, but Michael Dell coming in to theCUBE. That should be great. Hopefully we can get Jensen Huang as well. Tech Exchange, our team will be at IBM's technical event, community event, and I'm holding a special CUBE NYSE Wired thing for GSA, Women in Semiconductors. All the top names, Dave. Meta, Google, TSMC, AMD, all the top semiconductor power women. It's going to be freaking phenomenal. And then I'm staying in California and staying for Dreamforce, which you're going to go to Dell exclusive event in Austin. You're going to come up and meet us there. And, people can meet Gemma Allen in Dreamforce. She's our first event. She's our new social media person here in New York. She's got an Irish accent. So if you speak Irish, you're going to get along great with her. So it'll be fun. And then I'll be back here on the 20th. And then the studio will be full throttle.
And you're staying in Dreamforce now. You're not going back for IPO, right?
But I had an IPO on the 16th that got pushed because of the SEC and government shutdown slows the system down. So it's just all the paperwork basically stops. So again, like I said at the top, it's like this government shutdown is causing some tech damage, both on the momentum of tech in DC, which I like, and two, the IPOs are slowing down. So those are two things that are potentially not at risk, but like just, hey, when you have momentum, you don't screw with it. You just keep it going. When things are working, you keep going. So, when things slow down and stop, hair can grow on things. You don't know, right? It's like, you never know when the music stops. So I'm really nervous about that piece. Government intervention to our own national competitiveness. Now the market was up huge today. So 2 good days, people making money on Wall Street, but still.
Right, the government shuts down and the market ignores it. Well, it's interesting. The Dow was up.
Market went up.
The Dow was up.
To your Scott Neely comment, but 4 more years.
I know.
Stay shut.
But the Dow was up. NASDAQ was not. NASDAQ was down.
Oh well, I meant the NYSE was up. So
what do you mean?
The board here is everything's green. So
Dow, yeah, a lot of Dow stocks for sure.
All the main blue chips are up. So I think there's a lot of panic. Like I mentioned, Open Door has been trading heavily on the options exchange. Options dominated by Tesla and Nvidia every day, and you see Apple once in a while, but for the most part, you'll see companies pop on the option trade, and then you look at their fundamentals. There's something going on. So whenever it's a good indicator when I see a new name on the board, on the tape, as they call it, the tape. It's actually a digital board. It's not tape anymore. So I'm kind of learning the system here at the NYSE, kind of figuring things out. You can see this signaling. certainly I'm getting really good at the options side because we oversee the floor, and it's like a luxury box. And of course, Brian Bauman and his team, active, and the community work that we've been powering and it's just phenomenal activity. 5 people I know just recently got a job through the CUBE network and the Wired network. Leads are coming in. It's just a really cool digital fabric. Connecting Wall Street and Silicon Valley has just been phenomenal. So, I like how it kind of adds to our the layer of the CUBE and SiliconANGLE and the CUBE research, having that enterprise coverage. The deep dive now adding this new curation layer is going to be. I'm excited by the
network and the network too.
Well, it highlights the research work, right? We're doing the phenomenal research analysts we got. So, when you look at, if you're a research analyst and you have a real-time system like SiliconANGLE and the CUBE, and now a network with distribution, it's just the research flows into, as you prototyped and established a new category called breaking analysis. Nobody's doing breaking analysis. We invented it because research doesn't do breaking news. So when you're in the news cycle with research people and data and commentary, it's
context,
a marketplace. It's like high frequency trading. The impacts are phenomenal. And people coming up to me like, I love this stuff. I got a text last night from Salesforce executive, keep it going, don't stop. So it's super exciting. It really is. So
yeah. So next week, busy week. Next week we've got, I got a private meeting with execs at IBM. And then we got Michael and then we have the financial analyst meeting with Dell. We got Michael coming in, Arthur Lewis coming into the studio. We got that media week. Tech Exchange is next week in Orlando, I think. Oh, Orlando. Oh, why Orlando? It's gonna be raining down there. But and then the following week, another busy week, Dell Tech Summit. We got, I think, Kong that week. We got Dreamforce that week. Isn't NetApp that week too?
Yeah, and October is going to be brutal, and reInvent's like right around the corner. Thanksgiving will be upon us. So it's going to be interesting. It's going to be very, very interesting fall. I got to tell you, the activity is all-time high. It's great for us. So content is flowing. Well, Dave, we'll pick it up. We missed a week last week, so we
sorry about
travel.
that. No.
I was busy. I think we were both busy last Friday. So, all right. Well, hey, we'll see you next time then. I see you Monday. You're coming.
See you Monday.
Here.
Yeah. I might not see you Monday, actually. I'm staying in Midtown. I'm going to be in Midtown, I think.
All right. Well, I'll see you then Tuesday.
I'll see you Tuesday. I'll be coming down with some guests. All right, man.
All right. Put a wrap. Thanks, everybody. CUBE Pod. See you next time.